Hello, hello, hello. Happy Tuesday, everyone. Thank you for tuning in. Good afternoon, Donald. Mike, there's been a lot of negative tick in the last couple of days and the market hasn't moved. It's been super low volume, so it's a lot less important. What volume the last 2 days has been atrocious going into CPI tomorrow. Good afternoon, Royal Palms. Hey, Jashambi. If we have time, we'll look at Apple and Meta. Get your questions ready for Bob. Good afternoon, Patrick. I can't stick around for a long time dealing with some house stuff. This afternoon, we had, again, IBD, economic optimism, a huge drop in that, coming in way below forecasting consensus. And we had Williams' speech, and that was about it. Tomorrow, we got Bob's thought on inflation, but we got inflation 730 central, core inflation. So that's going to be the big number tomorrow, and then you just have EIA crude numbers. So everything before the cash open 730. Amazon was the mega cap that was up today. All the other ones were down, pulling back. Pretty mixed to slightly down market today. You can see industrials were the only thing that was really up. Industrials and energy. Technology and comm services and healthcare pulling back the most. Fed watch tool going into CPI. It has a 21.2% for another hike in June. So it'll be interesting to see how this changes after the CPI release tomorrow. And we're still in greed mode. Airbnb was down. I did not see their exact earnings, but I saw the big gap down afterwards, and Oxy was down a bit tomorrow. Before the open, we got Roblox, and that's the one that most people, or a lot of people, look at. After the close, we got Disney. So that's the big things tomorrow. All right. With that, let me bring on Bob. Hey, Bob.
Also got Reynolds, the tinfoil company tomorrow.
Okay, did I miss that one?
You better pay close attention to Reynolds and
Oh,
Wendy's.
oh well, get your
It is
frosties ready.
absolutely going to tell you the mood of May, how Reynolds is doing and how Disney is doing, or Wendy's is doing.
I mean, Wendy's isn't going to move the market though.
I love Wendy's.
Do you dip your fries in a frosty?
Who wouldn't dip their fries? Anybody who doesn't, leave this live stream right now.
All right. See you guys.
All right, I'm taking over here for a complete alien who doesn't
I
dip his fries in his
I
fries.
have never dipped a fry. My wife swears by it. I have not. Like I go to Wendy's. Maybe I haven't been to a Wendy's in years. I've just never. I
Honestly,
probably never had fries and a frosty at the same time at Wendy's. I don't even think.
I honestly haven't been to Wendy's in a long time either, but it was when Wendy's first sort of expanded. Remember, they expanded rapidly in like the early to mid '80s. They just started popping up everywhere all of a sudden. Man, they had the best food. It was the best fast food you could get, in my opinion. It's changed a little bit. Again, I haven't been there in a while. And they were the first one to have a decent chicken sandwich, like a real chicken sandwich. I don't know why they didn't get credit for that. Credit all goes to Chick-fil-A, which might have been around before then. I don't know.
Chick Fil A's
I
been
don't know
around.
who's old.
Chick Fil A's been
Yeah,
around forever.
yeah, long time. But I mean, I don't know when Wendy's came out with their chicken sandwich, but it was the best chicken sandwich you can get up north.
Oh, I do like Chick Fil A.
Yeah, I do too.
I like
But
their
I will say
grill.
the Popeyes chicken sandwich is better.
Yeah, but I like Chick Fil A's grilled, chicken sandwich too. It's
I
if
would
you
never get.
if you have to grab something that's not that unhealthy.
I wouldn't be in a Chick-fil-A drive-through if I had to grab something. It's not
Well,
unhealthy.
let's say you had to grab something. You were next to a Chick Fil A.
Okay, but if you put me next to a Chick-fil-A and I have to
I
grab
mean,
something,
you're not going out of your
this,
way.
listen, this is a complete waste of time because you don't have a lot of time. But I will tell you this: if I need something healthy in a hurry, I will run into a grocery store and get some like Boar's Head pit craft turkey and just eat that
But
out
the
of right
the grocery store went out of business, so you're stuck.
Christ. I'll run an extra mile and I'll get the fried chicken. How's that?
You go, all right. You're running the
All
mile
right.
for the fried chicken.
I don't want to take up your time. We're doing our food channel thing again, which Richard Gill said we were talking about crab cakes because Mike was there. So we've turned it all into a food channel.
Well,
I would love it.
you gotta branch out these days. Hey, John, what you guys need to stop the restricted eating time frame dieting. You're too hungry all the time.
It's a true story, Richard.
Uh,
Also, I don't want to take up all of your time, Mike, because I do. Royal is asking for Apple and Meta, and I want you to get a chance to look at the charts. Actually, if you want to do them now, because I don't see any questions here from me, and I don't have anything groundbreaking to say except while you're pulling those up. The only thing groundbreaking I think I have to say is that the Fed CME Fed Watch Tool is doing what we said it would do. It is slowly adjusting to the idea that there can be no rate hike, but there's a lot of pressure with the regional bank thing to bring rates back down. So it won't necessarily be an inflation thing. It will be more of a stress in the system thing. And then they'll be stuck with high inflation. So that'll be stagflation, like we said. So I don't know. That's really, it's not even earth shaking.
Stagflation, here we come. All right, Apple. I'd just be really focused on the Friday's open. You break below Friday's open, we could then trigger a full on gap fill down here, but my first target would be 167.51. Come up, we've bounced off the first harmonic and we're just pulling back, but until it breaks below, because you got a rising rotation zone, until it breaks below Friday's open, which could happen tomorrow morning if it's a hot CPI print. Bob, any thoughts on tomorrow's CPI, whether it'll be a line?
The market behavior leads me to believe that it's going to be a little hot. It really does. Um, just because of the way the CME Fed Watch tool has been moving, and I'm not into conspiracy theories, but the fact of the matter is there are often people who get leaks, and I would say they're usually in the BlackRock or Goldman Sachs type of place that gets those. So I haven't seen them adjust their forecasts at all, but I suspect it's going to be a tiny bit hot on the month to month. The interesting part is how the headline and the core year over year has flipped, where the headline is expected at 5%, the core is expected at 5.9. And remember, this is not what the Fed looks at to gauge where inflation is. They look at the core PCE and the headline PCE month over month and year over year. So, but I suspect it's going to come in a little hot.
Here's your meta. I'd really be watching for a break below this 230 area. We could see a quick trip down. The two targets I'd utilize 226. Bottom of the rotation zone in the 50% run up on the last push high. And then look, the breakout zone in the 62.5 is key, about 221.80. And then I'd watch for the gap fill because this is going to be a key support zone in there, especially with cycles at the bottom. Is that an ascending triangle in ES on the weekly chart? That's an ascending triangle. Not really. Not from my perspective. Let me just DOCN. Then we'll get to some more Bob questions. I see options 22 as something. DOCN. Ugh. Ugh.
Yeah.
I mean, boy, the only thing you got a nice today set up a nice. If you're long, you get back below 31.54 would not be long anymore. That would be looking for a rollover short. Otherwise, you break back above the 200. That's the only way I'd be looking for the long area in DOCN with the first target because you'd be above the 50% of the 35.60 and the next target 36.97. Now let's see. Bob Mike, the market represents the collective wisdom of all investors. Okay. So they must know something to be at these high levels without selling. Have you seen this before? I
Stocks are you talking about here?
I mean, I don't think
I
there's a
assume
lot.
you're talking about, are we talking about stocks here?
I guess. I mean, that's
Okay,
what I
can you
assume.
do me a favor, Mike? Can you pull up a weekly chart of the NASDAQ or a monthly? I don't care, just something long term. Options, I'm going to address this in a way where I was screaming at the radio yesterday. Okay. When the trading day ended, my car was set to Bloomberg Radio on my satellite radio channel. And I think it doesn't matter who it was. One of them said the NASDAQ has re entered a bull market. And all I kept thinking, because again, they use terms in whatever way fits what they want to happen and what they want to say. And this is the reason I basically, there's a story I'll tell you guys someday about how I told CNBC to go fuck themselves and I didn't want to be on their channel anymore. And I only watch Bloomberg now, and I need to stop watching Bloomberg now because they're changing. They said the NASDAQ is officially in a bull market. And the first thing I did when I got home is I pulled up a monthly chart of the NASDAQ, and then I went down to a weekly chart. And I said, in what world is this a bull market? And then I started going back on the weekly and looking at all the bull markets and how much different they looked than this little blip that these guys call a bull market. That's why original definitions matter. Okay, original definitions matter. A bull market has to break the old highs in order to be a bull market. Otherwise, you're in a bear market correction. Even if you retrace 99% of the drop, you're still in a bear market correction until it breaks it and begins a new bull market trend. I think options 22, I don't think the market is wrong. Okay, I never say that with any real conviction. I might say it as a tongue-in-cheek kind of a thing. Why is the market up? It's fucking wrong. I might say that, right? In what world is this a bull market? That's number one. Number two, go back to what Mike has been saying ad nauseum about the volume. Okay, the volume has been on the down days, not the up days, and it's been a dramatic difference. The first thing I did yesterday, when we started to rally yesterday in equities, I looked at the volume and it wasn't even 40% of the previous day's estimated volume. The volume has been on the big down days and it has not been there on the big up days. So to your point about the collective wisdom, you don't have volume, then you don't have collective wisdom. I would argue that you have not collective stupidity when you don't have volume. So again, I say the October 15th lows of last year are not the ultimate lows of this bear market. I also say that I could be wrong about that. I could be very wrong about that. I don't have a massive short trade on looking for those October 15th lows to break at all. So let's say the entire market, let's say the majority of the market or a plurality of the market thinks like me. That means they don't think the October 15th lows are the lows, and they don't have a position on to reflect that. Now, I'm not saying that's what people think, but I am saying that is the dominant opinion of myself, to a certain degree, Mike, and a lot of intelligent market people that I respect out there. So whether it's a crisis or whether it's an extension of the Fed tightening. Okay, and let's take a second to talk about that real quick. I talked about this in our podcast on Friday with Mike and Mike. Mike and Mike in the morning. Sounds like a morning zoo with two of the most calm people I've ever heard in my life, the most monotone people I've ever heard in my life. Mike Singleton and Mike Arnold. You two should team up and do a single tone podcast where the tones never change. Anyway, I mentioned this, that even if every rate cut that the market currently has priced in on the probabilities tab on the CME Fed Watch tool all the way through 2024 comes to fruition, okay, even if that works, that would bring the Fed funds rate to 2.75 to 3, 2.75 to 3%. If you take away this previous rate hike cycle, that is the highest Fed funds rate since 2008. And that means a vast majority of the C-suite has never seen it for an extended period of time. So I probably way went past what you said, options, but I'd like to fully answer your questions because I think you're one of the one of the most astute contributors here, in my opinion. And that's not a knock on anyone else. Options 22 just knows a lot, in my opinion. So, anyway, yeah, that's it. Good evening, Anissa.
Good evening, Anissa. Hey, Todd, Bob. Why does Congress always wait this long to fix the debt ceiling?
Tradition mostly.
Uh,
They
Bob,
just like to stand up and say, "I'm doing what my constituents want," until the very end where they can't. It's really just, I really believe it's just tradition.
when's the next big up move, and when's oil's next big up move coming?
Are you long and not willing to cover your poor lungs? Is that where this is coming from, John A? Oh, that was not John A. Who
That
was
was
that?
George.
I don't know, George. If it doesn't get driven higher, so look, I looked up, and I think it was George last week who said gasoline prices are not going down, but crude is. If it wasn't you, George, doesn't really matter. Um, I looked at the gasoline inventories right after somebody asked me that question, and the gasoline inventories are at 2014 levels. They're abysmal. So the supply of gasoline is actually way down. And when you look at the refinery utilization figures in the US, they popped above 90, but then they popped back below 90. So that means they're going to turn around for summer blend gasoline. And then last week, 2 weeks ago, they popped back above. They went to 91, then they went back to 90 again. That needs to ramp up, or gas prices aren't going to fall, even if crude oil does. So I suspect that you might get another pop during the summer driving season, but I still think the overall trend for energy is probably down. But again, all we did was kind of pop back to the bottom of this channel that crude oil's been flirting with on both sides. And I got to see it break back in before I'll even say there will be another up move coming. I still suspect that the biggest move is lower.
Bob, if credit tightening becomes a crisis, what would be the tells?
Um, that's interesting. Let me come back to you on a tell that you guys could see. I would say, like, the thing I've been watching from a perspective of credit has really been the Fed balance sheet, but it's kind of rearward looking because you saw the Fed balance sheet start to shrink again, which means there's been less demand at the Fed window from the regional banks. But you also have an issue because those are last ditched efforts by those banks to save themselves. So it's not really noticeable. Let me come back to you. Ask me that again on Thursday. Um, I'm 95% sure I'll be here Thursday. Ask me that again, and I'll try and find sort of a regular indicator. But um, you're really probably gonna. I don't. Let me come back to you on that. I don't really have a solid answer for you on that.
William wants to know where's his good evening, Bob.
Good evening, William. Buffalo
Sterling's
Bills in
late, so he's in timeout.
the free cocoa, free cocoa.
Can we look at NTR? Uh, yeah,
That looks awful.
that's the only thing yeah, the only thing is you got a potential little mini double bottom. Other than that, you got nothing. And that would just be for a minor pop up. That's not for, and that's against the rotation zone, so it's a lower probability. But if you look at this on your weekly, ugh, ugh. We could be coming into a pretty decent support area. There's a fair amount of support in 59 to 60. But other than that, unless it triggered that would just be a short little pop up play because that doesn't even take you back to major. Look at this. Here's your major breakdown area. That little double doesn't even take you above that, so it takes you into weekly rotation zone to roll on back over. So I wouldn't be aggressively looking for bullish plays for anything holding just yet. There's not a fantastic long-term bottoming pattern. There's just a little potential a pop trade to the upside that could never trigger. Volume determines direction, and the massive dump came in 2007, 2008. Never have we seen that selling volume. So the smart money is still in. Even the pandemic low volume was minor in comparison.
That's options to me. That's not really correct because you're talking about a massive dump. We haven't had a massive dump in this entire bear market. I mean, we've just had basically a bear market. Okay, we haven't had a crisis. 2007, 2008 was a crisis. Okay, the end of the 1999, 2000, 2001, the initial sell-offs there, that was a crisis. Okay, Bear Stearns blew up in 2007, 2008. Lehman blew up in 2007, 2008. We haven't seen that. We haven't had a crisis of that magnitude. Now, it doesn't mean that we can't. Okay, but in past bear markets, okay, the selling is to the downside and the buying, the upside, has very low volume, and that's what you have now. So you don't have to see 2007, 2008 dumps to say we're in a bear market. Prior to all this central bank intervention, okay, and I'll go all the way back to 2000 for that, where we had a central bank meddling in interest rate policy on a regular. Okay, that's when we've gotten crisis after crisis, and that's a new thing. We don't currently have a crisis. We have runaway inflation and some regional banks in trouble. Now, the regional bank thing can turn into a crisis, and that could push that selling to the levels you're talking about. But just look at the volume, man. It's sometimes double to the downside what it is to the upside on the bigger moves. So I disagree with you, dude. Doesn't mean that I'm right. Doesn't mean that I'm right.
Sterling seeing consumer credit tightening at the dealership level. The banks right now would rather have the customers who pay but are less than perfect for higher rates margins.
You know, I will tell you this, and this is to Richard as well. If you're talking about just general credit as opposed to credit spreads, okay, the senior loan officer survey is not a bad thing to look at. And the senior loan officer surveys showed quite a bit of tightening versus last quarter. Okay, 46.8% of senior loan officers said they tightened, and they're also seeing less demand. They tightened their own standards and they're seeing less demand. That's up from 44% from the last senior loan officer survey. But it's not a very frequent thing. So you are seeing bank credit tightening, if that's what you were asking. I'm not sure if that's what you were asking. I thought it was more credit spreads.
Hey, Daniel. So my guess, 2 cents, is that we go higher based on current market character and volume, and yes, up direction in a bear market.
I mean, okay, but I'm not sure why current market character and volume tells you up. But again, I'm very willing to be wrong about this, and I also think both the Nasdaq and the S&P, actually all three of them, I don't know about the Russell with the bank problems, but can go a lot higher before it turns around and moves toward those October 15th lows. There's a lot that can happen. Okay, but you have to see volume confirmation. We haven't seen it, in my opinion. But I'm very willing and open to being wrong.
Right, it's what I said on the podcast also. If we're breaking out to the upside, I need it coming out with some volume, not this low volume breakouts that, those are very short term trades, but not long term formulating a position.
Yeah. And I've had several trade opportunities to the upside. And that's the problem with people saying, are you bearish, right? Or are you bullish? I will never restrict myself to one side of the market or the other. There are times, and Mike does this too, I know for a fact, there are times where I look for trades in a direction because the trend is just too strong. But times like this, I'll take up or down if I see something, but I haven't yet. And options, thanks for that. I mean, I appreciate all your guys' questions and input, even if it's just messing around. If it's Geo doing a kill Mary F or whatever he always does, I don't care what it is. I appreciate you guys having input.
All right. All right. Well, let's call it at that. We'll see how the CPI comes out tomorrow, PPI on Thursday, and then the week will nearly be done. So, any parting comments, Bob?
No. If it goes nuts tomorrow, I'll go on. Okay, I'll come on and shit. Do I have time? Yeah, I think I have time.
We'll
I'll
be
come
here.
on for a few minutes. I'll come on for a few minutes if CPI comes on tomorrow because and kind of talk about what happened, but I won't be able to be on very long. And also Thursday, I'm traveling Friday, so I might be way too busy Thursday, but I'm 95% sure I'll be able to make the time.
All right, Bob. Well, thanks for making the time for us.
All right, guys. Cheers, everybody.
Thanks. Bye. All right, real quick, nothing much new. Still utilizing the same core levels from today. 41.34, we drop below that. 41.15, 41.14. Below that, 40.98. To the upside, we have to take out about 41.50. 354 area, then 4170, 4188. Otherwise, we're still in a massive consolidation pattern. So that's where it's really nice to use the harmonics levels. If we do break down, I will be looking for a return to the 50, which is at 4100, 4098 to 4100. We start breaking below 4100, and and this isn't necessarily just for tomorrow, but below 4077 starts getting interesting. So, and again, we take out about, if especially if we close above 4150, what is it, 4150, let's just go 4153, then I would be looking for a retest of this 4200 level. Overall, we are still have downwards pressure for at least the next potentially couple weeks. So it shall be interesting for the NASDAQ. Again, my breakdown level is about 13,250, then targeting 13,160 area, and then the 13,000 area to the upside. My breakout area is about 13,360. Minor 13,417, 13,486 is more significant. The Dow still watching for a continued down roll over move. It's holding against the 50 again, but since it triggered a double top. Russell breakdown 1737, then 1723 breakout. I'm bumping this up a bit at this point to above 1765. Notes aren't doing anything. They're still caught in a massive consolidation. They'll be moving tomorrow. Dollar index, again, still in a massive consolidation. We got to get, a lot of things are in consolidations. Crude, from my perspective, still in trailing mode. If it bumps up 74.30, then 75. Gold, still sitting here. Come on. Still sitting here. Rotation up today. But that's about it there. Tesla, watching this little flagging pattern for the next rollover move there, but still holding up. So I'm watching this breakdown below this key upward sloping channel area. And what else do we have? TSN got rocked after earnings and poor guidance. I know there's no bottom pattern yet, but what do your downside levels from here look like on the weekly? Let's just see what. Uh, Our next level would be about this 4650 area. This is prior breakout zone, key gap open right here. Then 42.57, below 42.57 on a break below that. Well, let's see how our forward harmonics look. I mean, our reverse harmonics. 35.30, right at this little support base. There you go. You got a cluster right there. Then 28.03. Yeah, there's no bottoming pattern, but on any move up, this is why when things are I wait for bottoming patterns, because we talked about stuff that goes against the rotation zone. Look, this is why I hate trading against the rotation zone unless there's a strong bottoming pattern, unless you're going to be very nimble. Rotation up, boom, into the rotation zone, boom, into the rotation zone, huge drop. So you have to be very nimble in here. That's why for longs, I like it to go with the rotation zone unless we get a major bottoming pattern. And this is not a major bottoming pattern, as Sterling said. Yeah, PayPal's well below COVID levels, also looking like clear paths on the weekly. Thoughts on the levels? I've loved PayPal as a short. We finally took forever to break down again. But my next minor levels are 63, 61, 60, 83. I'm actually prepared with those levels. I wonder why. And then, you know, I forgot to check it. This thing can still come down substantially. There is the next major support is 45. The next major support is 45. By the way, 65. This area we're closing in on the 87.5 from the round trip. The round trip. We've already hit that a couple times, but now with this breakdown, this again not something I want to be long at all. At all. And don't want to pick a bottom yet, but this isn't technically a clear path, but there's very little support in here. So if the market rolls over, and I'm not saying this has to happen anytime soon, this could chug along and, you know, trade back and forth lower. But if the market eventually gets some downside momentum, PayPal will be one that I'll look for a pretty rapid potential breakdown to possibly 45. Yeah, I agree, Roll Palms. Hit the like. What time tomorrow for these? We'll be on tomorrow morning at 8 in the morning and the normal time in the afternoon. Then I'm going to call it a day. So obviously the big gap up, the open coming back down, the breakout level and back up. So I would really be targeting on a continued move up this 10 to 1020 area. Because it's through this, it's above the 62.5. So first I would use the 75 at least for a trailing level in this kind of market. And then, so same targets we discussed, 1020, 10 to 1020, and then 1091. And you got a gap fill still left behind here. So that'd be 1091 to, what's this? Well, I go to the open first. So 1091 to 11 bucks, and then you still have a gap left behind to 1145. But this would be the key level I'd utilize in the short term. And from a stop perspective, today's lows, if you're along this gives a really nice initial trailing area. Why would I utilize these lows? Because if it were to roll back over, it would take out. So this was resistance. It gapped above, retested, and closed up. So this is major support. But if it comes back down here, takes out the lows, then it's broken the key support and the low from the gap up days, and it would then I'd be focusing on a rollover and a potential gap fill back down to these lows. real quick. Upstart. I guess they released good earnings. That's why I show people exactly what it is. So it's above this level and above. I'd watch to see how it opens around this area tomorrow. If it trades through there, you guys can do this stuff. I'd watch 2094 and then 2275. But I'd use 2160 as an intermediate level in there. If it holds up. I haven't looked at their earnings. And since I do take after hours stuff with a grain of salt, if it rolls over, your key support is this 1830 area and your minor support is 1906. Affirm, besides being a mess, this is at $9 is key support. Key resistance is about 1250, 1260. In there, between that, it's no man's land. That is, let's see if it's that's sort of a mess here. What was this high? 1227, 1230. Just that's so technically against the rotation zone, so lower probability double. But against the rotation zone, it could not close above the rotation zone. And now it's back down here. So I'd be watching $9 as key support. Yeah, the only way I'd trade Palantir is with you could do a pullback before something else, but if you can't get risk reward, I'd pass on it. All right, with that, I got to run now. I shall talk to everyone tomorrow morning after. Remember, CPI 730, so don't get caught off guard. Even though it's not the Fed's preferred metric, it's the market will be paying attention. And if you think it's not going to be, well, look at the last 2 days of volume. Again, look at these last 2 days. Nearly half the big down days from last week. So just very low volume, very low trading range going into the CPI. So I think we'll get some movement tomorrow, and the CPI is way more important than the PPI. Georgie, we'll have to do that tomorrow. I got to run. Thank you, Anissa. I'll talk to everyone later. Bye for now.